Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, October 28th. Before we start, please know that I wish all of you a very safe and happy Halloween. Well, the S&P 500 index and the NASDAQ were weighed down this morning by Amazon and healthcare stocks, while Chevron lifted the Dow. Shares of Amazon were set for their worst day in nearly 9 months, falling nearly 5% to $780 after they warned heavy investments in the holiday quarter would drag profits lower. Profits at S&P 500 companies, however, are expected to rise 2.6%, helped largely by financial companies, according to Thomson Reuters. However, energy companies are expected to take the biggest hit this quarter. Market players expect the third quarter to mark the end, we hope, of a year-long earnings recession as more companies are beating expectations. Now, as well today, the gross domestic product was issued, and it showed the U.S. economy grew at its fastest pace in 2 years, with the GDP increasing at 2.9% annual rate in the third quarter, and that was helped by a surge in exports. So on that note, let's move into 3 charts that could give us some insight into the week to come. Now, first of all, I would like to look at a weekly chart this week of the S&P 500 SPDR, symbol SPY. We're looking at that because for several reasons. First of all, it really helps from time to time, and I do it several times a week, to look at longer-term charts of indexes and certainly of the positions we're holding in the longer term. If we look at longer-term charts like weekly or monthly charts, they give us a reality check. They also tend to give us some, alleviate stress sometimes because price moves that look so big on intraday and even daily charts really may not be that big of a deal at all if we back up to a weekly or monthly chart and look at these price moves. So these longer term charts again give us a reality check. Sometimes it's good news, sometimes not so much, but we certainly want to know the absolute truth when we're trading or investing, and that's what these longer term charts give to us. Now on this weekly chart of the S&P 500 SPDR, as you all know, this is the tracking stock, the ETF that closely follows our U.S. S&P 500 benchmark index. We can see here that this chart was plotted from 2012, about the middle of 2012, all the way through 2013, 2014, and all the way to present day. Now on this chart, I've plotted a 30-week simple moving average, this black line. It's a great all-purpose average that really gives you a good perspective on indexes it tracks and many times on equities as well. Now this 30-week moving average has drawn since 2012 a near perfect trend line for the S&P 500, just absolutely nearly perfect. And we can see that for any length of time, it was back in August of 2015 when the SPY fell through this 30-week moving average. I mean, there were a couple of hiccups along the way in 2014 and certainly in 2011 and 12, but we can see the true weakness coming into the SPY here in the middle of 2015, certainly in the beginning of this year. It dipped down a little again in May, and now we're up sitting atop it. When I captured this chart today, again, the SPY was trading at $213.81, which is about $21.38 on the S&P 500 itself. So it's sitting atop right now the 30-week moving average. We have support here on the SPY at 213 to 212. This is a pretty important support zone, potential support I should call it. If I could draw a straight line here, not too well, we can see that this 2012 is actually 2013. This is a important resistance, now support line for the S&P 500 index, and so 2120, I would say, or 212 on the SPY is the lowest we want this to go. If it does that and falls through this support, then maybe it heads down to 208 or so, 2080 on the S&P 500, which would be about a 5% correction. But, you know, maybe not. Maybe in the coming week it stays above this line. So I'm going to keep, maybe it goes back up to 219 or even to a new high at 220. We're going to have to see here if the buyers are strong enough in the coming weeks here to come in again, to hold up the SPY, to put enough buying pressure on it that it stays above the 30-week moving average, that it stays above 212 to 213. That will be good news if it does for the longs. If not, and it rolls over, then I become, if it moves below this 2012 line, I become much more cautious in my portfolio. I take more profits. I firm up my stops, and part of my money moves into cash and onto the sidelines, a good portion of it. Now, if we look at the RSI here at the end of this chart at the bottom, we can see the 14-week RSI has come down, pretty much moving with price. Now it's in the neutral zone at 50. We also see the MACD, the black line, has fallen below the red line, the signal line, and the MACD is still above the zero line. So on this weekly chart, that is a positive note, at least so far. So keep an eye on that 212, 213 level on the SPY and the 30-week moving average. Now we're going to move into the iShares Russell 2000 Exchange Traded Fund, symbol IWM. And as you all know, I like to watch the IWM as a leading indicator for the broader market. Russell 2000 stocks, these are small cap stocks. Many of these companies, most all of them I'm going to say, are located in the U.S. and they do not do business overseas. So we can really look at the IWM as kind of a U.S. stock-centric exchange-traded fund. And we can use it again as a leading indicator for the broader market or for the SPY, as it tends to act first and then the broader market acts second. So we keep an eye on this as well. Now we know that the IWM came up and made a relative high. It's not an all-time high. That was a little higher a year ago. But it made a relative high at $125.80 on September 22nd. Then it started heading south. It broke this past week. It broke this 120 support line that I've been watching for quite some time. If you see me on Twitter, you know that I've been talking about it quite a bit. And we know this 120 line is extremely important potential support for the IWM. And now that it's moved below it, and when I captured the chart today, IWM's trading at $118.92. Now it's trading below that potential support, so it wasn't support. Now that's been, it fell through that actually yesterday, closed below it. And now we want to see if the IWM had lows today of about 118. The trick is, can it move back into this prior resistance zone where these sellers were and hang tough above 120, or does it move sideways or down for the next few days and then head lower? If it does, it has interim support at about 117, more at about 115, and more down. Well, the 200-day moving average now is about 114. That will change slightly in the next few days, of course. So in the short term, the IWM is oversold on the RSI. I want to keep an eye on this as well for its progress. So let's see in the coming week, again, if it can move above 120. Then maybe if that does, the SPY stays above the 30-day moving average. And then maybe we exhale a little bit. If the IWM, however, continues to move lower, then I get more cautious and more conservative. Our final chart for the day is the iShares Transportation Average ETF, symbol IYT. This is an exchange-traded fund that has 20 holdings. The top components are FedEx, UPS, Norfolk Southern, Union Pacific, JB Transport Services, and if this gross domestic product number is not just an outlier with the exports being as high as they are, if that's just not an outlier, if in fact that remains good, that could be good for transportation shares. We like to see, of course, the Dow and transportation moving up together. That's a very strong indicator. But for right now, I'm looking at the IYT. I'm looking here that it's trading above the 50-day moving average, the 200-day moving average, and the 20-day moving average. Now we can see that it's actually been kind of trundling sideways here for most of the year, fell on the Brexit news, popped back up like everybody else did, and then started making higher lows here. We know airline stocks have been good. We've been trading those successfully. So now we're looking at the IYT. We're looking at the strength it has today. It closed, and when I captured this chart, at $144.93. Again, above just today, closing up or moving above its 20-day moving average, sitting at its 50-day moving average, and certainly above its rising 200-day moving. So what I'm going to look at it, the all-time high on this was $167.80 on November 2014. If it can stay above its 50-day moving average here, down around about 143, 144 right here, if it can stay above the green line, if it can continue to move higher in coming weeks, then potentially the IYT has the strength to move back above 146 and move higher from there. And then that will especially be true, I think, if oil prices remain in the $40 to $50 range, if they remain in that low range. Of course, if oil prices start climbing dramatically, I don't know why they would, but if they did, that would put some pressure on transportation stocks. But until that happens, they may have a chance to move higher here. Again, the IYT is not a day trading vehicle because it doesn't usually have enough volume to make it that. But otherwise, it is something you would want to look at and maybe enter as long as it stays above the 50-day moving average. Okay, now on to next week's economic reports. But first, please join us on Monday, October 24th for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and exchange-traded funds that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, not a problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. And first, please remember we are still in the middle of earnings season, and earnings results from the generals, I call them, or the large cap momentum stocks, can still move the markets. On Monday, economic-wise, we have core PCE price index and the Chicago PMI. On Tuesday, we have the ISM. That's a monthly manufacturing index that is important. We also have auto and truck sales. On Wednesday, we have the ADP employment change, also important, along with our weekly crude inventories. And on Wednesday afternoon, about 2 o'clock, we will also have the November FOMC rate decision. No one expects a change in this rate decision, but of course we always stay tuned to see what's going on with that. Sometimes we get surprised. Thursday, we have our usual weekly jobless claims, ISM services, and our usual natural gas inventories. Friday, we have jobs numbers with the unemployment rate, and that will be another important report. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.